All right, let's give you that markets update now. And world market sentiment turning positive following better than expected U.S. inflation figures. Investors are positive of a stronger close in this week's trade following jitters that marred the previous sessions. The JSE has also joined the global peers in the current market rally to mark the biggest one-day gain, while the rand made some gains after reaching a one-month low earlier this month. Let's talk now to portfolio manager at Rand Swiss, Viv Govender is the name. Viv, good morning to you, sir. Let's start off with what turned the tide in this global activity.
Well, I mean, the market at the moment, just to give a bit of direction, the key driver is going to be what's going to happen to interest rates. And the fact of the matter is that even though inflation was higher in the last period, it was 0.1% for the 12 months lower than expected. That's showing that, we are seeing the general trend still being, towards lower inflation. And I think that if we do have low inflation, many governments around the world, or many central banks around the world rather, are going to have a strong incentive to start cutting rates sooner rather than later. And that's going to be very good for stock markets.
Well, what does that mean then, this improved market development for emerging market currencies, for example, the rand making some gains after reaching one-month lows?
Yeah, look, I mean, some gains are very minor. Let me say that, right? To give you an idea, I mean, on that Friday of the 28th of July, we were sitting at about 17.27. Yesterday, we got up to just about 19. And right now we're about 18.84. We're talking about an 8%, 9% movement around in a period of just about 2 weeks, or just under 2 weeks, in fact. Significant weakness coming through in the currency. Now, this is something I think that's more related to us in particular. I mean, we have seen the real weaken as well as some other emerging markets currency weaken. I think we in South Africa are having a particularly bad time at the moment. So hopefully we do see some strength coming through. If we don't, it's going to be a very bad patch because remember, not only is the rand weakening, but the oil price is also getting stronger, which would be very bad for our local inflation number.
Yeah, well, let's focus the attention domestically then. How has the market received the positive mining and manufacturing production numbers?
Well, I mean, it's hard to determine that exactly because the market is, reasonably, buffeted by what's happening internationally as well. And we had, like you said, a very good day, yesterday. Right now, the market is looking to open slightly negative. And we are seeing, for instance, in the resource sector, it's slightly negative, just about flat at the moment. So overall, the overall market is negative, but the resource sector is doing the best out of the three sectors, even though it is slightly negative. So I think it is helping a little bit. We need to be seeing, some, resolution of some of our infrastructure problems, not just with regards to Eskom, but Transnet as well. Very key components of our mining and manufacturing sectors.
Yeah. Let's talk company news then. Cashbuild expecting another hefty drop in profits. What's driving that sentiment?
Look, with customers under pressure, as well as the fact that we had a bit of a COVID rally. People, when they stuck at home, saw their houses and thought, hey, I can make a little difference here or there that's going to make my house a lot better. The lockdown actually helped, I think, improve, Cashbuild's performance. But since then, we are seeing a lot of difficulties coming to the consumer. If you think about it, who's going to go to Cashbuild? Not a renter, but a homeowner. A homeowner basically at the moment is paying more if he has a home loan than he was like a few years ago. I mean, insurance, talking about more than 20% more for a monthly payment than you would a couple of years ago. Obviously, that's decreasing your ability to afford, these kind of renovations, etc. I think that's on top of the fact that the overall economy is under pressure, really hurting Cashbuild.
Let's conclude with Alibaba's quarterly revenue, which has hit a 2-year high. Tell us about their performance.
Yeah, look, Alibaba has had a very, very rough period here. If you look at where they were basically back in 2020 until now, it's down 2/3 effectively. The Chinese government has had a really strangely, a bad opinion or a negative opinion about the tech sector for the last couple of years. And that's really hurt, not just Alibaba, but most of the tech stocks out there. Alibaba more than most because of the, the former founders, Jack Ma's, conflict with the government. Look, I mean, we are seeing a return to some stability in the Chinese economy. They got out of COVID, lockdowns later than anybody else. And they are, at the moment experiencing a bit of a slow recovery, though, compared to most of the world, that's still reasonably fast, especially compared to us, reasonably fast. There's a lot of recovery that's required for Alibaba. Like I said, they'd have to more than double, basically triple in price from here to get back to where they were in 2020. So I do suspect that we are going to be seeing, a bit of recovery coming through, especially if they can see some of the numbers looking as reasonable as the last set of numbers look.
Viv Govender, thank you very much for that markets update, portfolio manager at Rand Swiss.